a set of companies that is going to benefit from a cashless economy. And we are seeing some of them buzzing today. Varinder has done some number crunching on how some of these stocks stack up. We've discussed RS Software in the past as well, Varinder, but why don't you take our viewers through all these stocks?
Well, there are many companies, which, they have products or products they manufacture or some of the softwares they manufacture, which could actually benefit post this demonetization, because that will help them company to clearly go for this cashless society, what we're talking about in the next few months, few years. So, the top 5 companies which come to your head, of course, there are smaller companies as well, but the top 5 companies are clearly Quick Heal, RS Software, TVS Electronics, HCL Info, and Nucleus Software. And tell you the reason why. Look at Quick Heal. It's a play on the antivirus, which could be used in mobile phones, laptops, all communication devices. Majorly, the company will benefit because of the B2B transactions more and more, getting in the future. RS Software, clearly, it's a play on the electronic payment software system. Visa was one of their biggest clients. Now, lately, what they've done is, because Visa share came down from 80% to 20%, and they have completely exited Visa business, and they are focusing only on the domestic business after this demonetization. TVS Electronics, they are play on the electronic payment products, all these swipe cards, swipe machines, billing machines and everything, they manufacture those machines. HCL Infosystem, we all know it's a play on Aadhaar card. They maintain central database of nearly 100 crore individuals. And Nucleus Software, the company which we had recently on Bazaar, they told us that they have developed world's first offline payment solution system. So you can clearly see how these companies are into this cashless society business. But important is to understand the valuation. So we have taken few parameters on just to understand whether have they done anything and how they could stack up in the future. So if you look at one of the parameters, which is EV by EBITDA, this is the historical numbers I'm talking about, which is FY16 EV to EBITDA. In this case, clearly Quick Heal looks the cheapest. 13 times EV to EBITDA number by Quick Heal. The second one is TVS Electronics. Nucleus Software is 22 times. RS Software, because it has run up huge, it is 37 times. No numbers coming in from there. And HCL Info, what can I say? People are tied up because there are from the last 2 or 3 years, there is no numbers, or the company has not reported numbers what people could have liked. So if you just go by EV to EBITDA, clearly Quick Heal, TVS Electronics are the 2 cheapest one in that category. Look at the margins, because margins are the most important criteria in these companies. Quick Heal, they have margins of nearly 30%, which they reported on a consolidated basis in FY16. Second is Nucleus Software, which is 9%. TVS Electronics, 2.5%. RS Software, very small, 1.5%. HCL Infosystem was in negative territory, which was 2.5%. Also, these companies have market cap which are very, very small. If we have to believe that there's a huge opportunity for these companies going ahead, then these market caps are small. And some of these companies, they are zero debt, high cash. Look at Quick Heal,
I just had one question. You were talking about the margin picture. For some of these companies, say Nucleus Software, for example, because we just spoke to the management, so there's immediate recall. These companies haven't really grown as far as revenues are concerned for at least 3 years. So Nucleus Software, for example, last 3 years, 300 crores. I understand this must be product formation time, but should we expect a couple of more quarters of weakness?
Sonia, out of these 5, there might be 2 companies which could clearly take the opportunity what is there in the future. As I said, they have products now. They are now also focused on what they can do to monetize this huge opportunity in front of them. Now, clearly the thing is whether they will chase volumes and whether they can implement, they can grow the margins or not. Look at this, this company by the name of TVS Electronics. Now you have to see, whether you want to go to pedigree. If you have to go to pedigree, then you have TVS and you have another company which is HCL. Okay, HCL hasn't delivered. TVS is a company which has a market cap of only 300 crores, zero debt, and cash of some 10-15 crores. Also, that company, has last year it reported a sales of 600 crores. Where is the problem? Problem is in the margins. Margins of only 2.5%. Whether then margins can grow to 10%, if that grows, you will clearly see that market cap surging away. But at the moment, if there is some company clearly which is giving you good margins, good valuation is Quick Heal. And I'm not surprised why Quick Heal is up today. And of course, they had an investor meet today as well, which is also having an impact on the price. But these are the companies to clearly keep on your radar because of the opportunities. The point is that quarter after quarter, you have to review the numbers, that whether they are seizing the opportunity or not.
Okay, Varinder, thanks a lot for that. So some of these stocks are doing well. Prakash,